welcoming you all for the today's session. Now I request Mr. K. Shankar, Executive Committee Member of SICI, to deliver the welcome address. I request you to take it forward, sir.
Can you hear me, Ravani?
Yes, sir. Yeah.
Okay. So good afternoon, ladies and gentlemen, who have today logged on to this webinar on rooftop solar for the commercial and industrial consumers in Tamil Nadu. We have a distinguished panel of speakers today, and I would like to welcome Mr. Martin Schefter, co-founder, Orwell Consulting, Mr. Hari Subish Kumar Subramanian, energy researcher, the Orwell Consulting, Mrs. Sadhana Mankar, Deputy General Manager, State Bank of India, who would be handling the sessions today. Before we start, a few words about SICI, a 100-year-old institution started by the inspiration of Mahatma Gandhi. While being a leading regional chamber, the chamber possesses a national outlook with excellent relationships with both the central and state governments. The chamber had recently drafted an agenda for the new government of Tamil Nadu, which was submitted to the Honorable Chief Minister and also to all key ministers of this cabinet. It is currently working with the Tamil Nadu government on several initiatives, including ones on aerospace and defense, food processing, agriculture, skill development, Tamil technology development, and diaspora outreach. Global warming is a buzzword these days, and its inherent effects on our lives have ensured that governments worldwide devote a good deal of their attention to renewable energy in their efforts to reduce emission. India, while already having achieved 100 gigawatts, has set itself an ambitious target of generating 450 GW of renewable energy by 2030. In this regard, the government is encouraging both the commercial and industrial sectors to do its part in achieving their target by introduction of various commercially attractive schemes. Harnessing rooftop solar energy by the C&I consumers is one of the thrust areas of the government. And in this regard, it may be noted that our state of Tamil Nadu, due to its weather conditions, has a potential to be a leader in this area. While a small beginning has already been made, it is a long way to go, and it is in this backdrop that South India Chamber of Commerce and Industries, jointly with Orwell Consulting, are conducting this webinar to bring about an awareness to the business community so that they could benefit economically, and with their collective involvement, the state's target could be achieved. A large amount of development to convert solar energy to power is taking place in the world today. The best efficiency of a solar cell, measured in terms of the capacity to convert sunlight into power, is only 25.54%. And a lot of research is going on worldwide to increase this further, while at the same time reducing the cost of an installation. The Indian solar industry currently depends heavily on import of PV cells, which costs the exchequer US dollars 2.5 billion a year. And the government aims to reduce this by increasing domestic manufacturing. I hope the deliberations during this webinar would address these issues along with economic ones of payback on investment and operational maintenance costs that would be beneficial to the participants of this seminar when they look at possible rooftop solar installations at their various companies. So I wish all of you a very good and educative webinar. Thank you very much.
Thank you, sir. Thank you for your warm welcome. Now I request Mr. Martin Scoffler, co-founder, Orwell Consulting, to deliver address on Tamil Nadu solar energy policy. A brief profile about Mr. Martin. Martin is the co-founder of Auroville Consulting, a unit of the Auroville Foundation, and he is currently engaged in power sector reforms, research and policy advocacy for distributed renewable energy generation. I welcome you, sir.
Yeah, thank you, Sharanya, for the introduction. And a big thank you also to the South Indian Chamber of Commerce and Industry for hosting this seminar. To be honest, I am technology challenged right now because I'm not able to share my presentation. Could somebody support me with that? I have no option on my side to share my screen.
Please, will you share the screen?
Yeah, so I'm not able to share my screen, Sharanya. I have no options here, so I'm not permitted to share the screen. Hari,
Yeah.
Hari, do you have permissions to share?
We gave the access. Could you just try it?
Yeah. No, my apologies. I'm not able. I get your message, but I have something is loading. Okay, yeah, that's better. I think somebody else has it. Hari, is that you? Okay, so apologies for the technical hiccup. I hope you can all see the presentation full screen. Yeah. So yeah, again, a warm thank you to everybody and thanks for hosting us. I think one of the motivations for us for this webinar is that we have interacted with a good number of stakeholders from both industry and the commercial sector over the last years. And we often encounter a lot of questions when it comes to the rooftop solar energy policy in Tamil Nadu. And we found also there was very often a certain level of misinformation. So we are hoping that we, with a series of webinars, we could at least present what is the opportunities today when we talk about CNI entities in Tamil Nadu in the context of rooftop solar. So I will keep the presentation short. I want to share with you a short introduction of what's the rooftop solar policy in Tamil Nadu today, what are the opportunities, and what are the pain points, so to say. Hari, next slide. Yeah, so the agenda is, yes. So this is a work that is part of a wider initiatives, which is called the Sustainable Energy Transformation Project in Tamil Nadu, which is a project by a consortium of 3 partners. There is the World Resources Institute, the Citizen and Consumer Action Group from Chennai, and Auroville Consulting. And the aim is really to facilitate a higher integration of clean energy in the state. Now, do we have an enabling solar energy policy? So that is the question, and I would like to run you through some of the strong points and maybe some of the pain points. So you may all be aware that the latest Tamil Nadu solar energy policy that was released in 2019 has set an overall solar energy target of 9,000 megawatt to be met by the year 2023. And this overall target was subdivided into a utility category target of 5,400 megawatt and a consumer category or rooftop solar energy target of a 3,600 megawatt. So if you look at what has been achieved as of March 2021, March this year, the accumulative installed capacity in the state is a 4,431 megawatt. The majority goes on the account of utility category. That means ground-mounted solar, megawatt scale, with about 4,000 megawatt. And you see that with the utility category, we are very close on achieving the target. There is only a 1,300 megawatt missing, and I think we can say with confidence that this will be achieved in the remaining year. However, if you look at the rooftop segment, we have 325 megawatt installed, whereas the target is a 3,600 megawatts. So we have less than 10% of the target met. The remaining capacity, if the target were to be achieved, is a 3,275 megawatt. Thank you, Harry. Now, and this was in terms of capacity. I think it's also important that we talk in energy terms. So if the solar energy target of 9,000 megawatt were to be met by the year 23, it represents about 10% of the total electrical energy consumption in the state. About 6.3% again would be for utility category, and about less than 4% would of the total energy, electrical energy, would be on account of rooftop solar. The reason why I'm emphasizing the 4% is because you may see there's a lot of discussions around rooftop solar impacting the financial performance of Tangeco. But if we look at percentage in terms of energy, if the target were to be met, and remember today we only have 10% of the target, we are talking about a very small amount of less than 4%. Next slide, please. Some of the key features when we talk about the Tamil Nadu solar energy policy. So the policy has introduced two terms, utility category systems and consumer category systems. Whereas utility category system has been defined as solar energy system with the primarily purpose of selling electricity either to the utility or using open access. Consumer category systems have been defined where the objective is first self-consumption. Like a typical rooftop solar system, the consumer first consumes the solar energy and export or surplus energy, if there is any, will be exported to the grid. And these two systems then will bring in various metering mechanisms. So for the utility category, we have solar energy cross feed-in. And this is permitted as per policy at all voltage levels. Of course, subject to the applicable wheeling and grid charges, and a tariff to be determined by TNERC. For the consumer category system, a solar net feed-in mechanism has been introduced, which is available for all LT electricity consumers. Unfortunately, HD consumers have been excluded from the net feed-in mechanism. Now, the next slide, I want to spend a little bit time on the different metering mechanisms. The majority of you is familiar with net metering. This is what Tamil Nadu had as a metering mechanism before the 2019 policy, and it's typically what is being found in most of the states in India. So net metering is simple, where the solar energy after self-consumption exported to the grid has the value of the respective consumer tariff. Meaning if I'm on a high tariff, like commercial tariff of 8 rupees, the kilowatt hour of solar energy exported to the grid will have a value of 8 rupees. If I'm a consumer with a low tariff, like a domestic consumer with an average tariff of 2.5 rupees, the surplus solar exported to the grid will be valued at 2.5 rupees. So there was a sense that it is not fair if you look at the different consumer categories. There was also a strong push by the utilities because the utility had to purchase power at a fairly high price in case it came from a commercial consumer. They had to buy solar power for 8 rupees per kilowatt hour. And the compromise at this time was to introduce a net feed-in mechanism. So what is a net feed-in mechanism? Is after self-consumption, for every kilowatt hour of solar exported by the consumer to the grid, there will be a tariff for the exported solar energy at which the consumer will get compensated. And lastly, we have cross feed in, which is simple. The unit of solar energy exported, or all the units will be exported, and they will be compensated at a tariff to be determined by TNERC. Now, some of the pain points when we look at the current policy, and I'll go through them in more detail in the next slide, but one is there is a self-generation tax. Harry, wait. The current net feed-in tariff is, Harry, keep on the first slide, please. The current net feed-in tariff is low. The solar energy policy has proposed to introduce a time of the day tariff to incentivize solar and battery storage. There is a mandate to install a second gross energy generation meter for any rooftop solar system. HD consumers, unfortunately, have been so far excluded from the net feed-in tariff. And there is an inspection by the Chief Electrical Inspectorate, which often causes delay in the commissioning of the system. And I'll go into details for each of those points. Now, self-generation tax. As per policy, rooftop solar systems are exempted from the self-generation tax till 2021. So we have to see whether this will be extended, this exemption this year or not. So the argument that we would have is in order to promote rooftop solar, and you have seen we are at only 10% of the target, the government may do away with the self-generation tax on rooftop solar. Self-generation tax is 10 paisa for every unit generated. Next slide. Net feed-in mechanisms for all consumers. So as mentioned, currently only low voltage consumers are eligible for the net feed-in mechanism, which has impact, a wide spectrum of consumers, especially commercial, industrial, HD consumers, but also educational institutions. Now, currently for HD consumers, the only mechanism available for rooftop solar is called paralleling operation, where the consumer can install rooftop solar, but any export of surplus solar has to be either curtailed or in most cases will not be compensated for or doesn't receive any credit by the utility. In addition, there's a paralleling charge, which is currently 15,000 rupees per megawatt a month. Now, the second pain point is the extremely low net feed-in tariff for the surplus solar exported to the grid. So TNERC, in its order in 2019 for rooftop solar generation, has come up with 3 methodologies to determine the net feed-in tariff. And it was actually a very unusual way of determining a tariff, because typically a tariff is determined on the levelized cost calculation. But the way the tariff has been fixed is the following. It is either 75% of the pool cost of power purchase, or 75% of the last feed-in tariff for solar determined by the Commission, or last option, 75% of the tariff discovered in the latest competitive bidding for rooftop solar, and it is any of those ones that is the lowest. So for the current financial year, the net feed-in tariff works out to be 2 rupees 0.08 per kilowatt hour, which is definitely less the cost of generating 1 kilowatt hour from a rooftop solar system, which makes it financially a not very attractive proposition for any investment into rooftop solar. Another pain point is that the policy suggests to introduce a time of the day solar energy feed-in tariff to encourage consumers to install storage, grid active storage that can provide grid services primarily during the peak hours in the evening. So far, the time of the day tariff has not yet been introduced. Another pain point is the gross energy meter that has been mandated by TNERC. Now, to give you an example of what this means, assuming that IIT Madras would install a rooftop solar system. Now, let's assume that their service connection point with TNEB is at the gate, at the entrance gate, and they decide to install a rooftop solar system and a net feed-in mechanism at the end of the campus, let's say a kilometer down the campus. Now, if the gross generation meter is mandated, the campus would need to run a wire from the last building all the way to the service connection point to install a cross generation meter, which means that the cost of the meter and the wiring will be higher than the solar system itself. Yeah. Last pain point is in Tamil Nadu, any solar energy system with a larger capacity than 10 kilowatt requires a CVT certificate by the Electrical Inspectorate. And this has led to delays in commissioning of many solar systems. A suggestion has been made that the limit may be increased from 10 kilowatt to 100 kilowatt. De facto, Ministry of Power has recommended to increase it from 10 kilowatt to a 500 kilowatt in order to avoid delays in the inspection and also to deal with the fact that the Electrical Inspectorate is understaffed in the first place. So those are some of the pain points. Just to summarize a little bit. So commercial and industrial entities that are currently LT consumers can go for rooftop solar in Tamil Nadu under net feeding mechanism, where they can first self-consume the solar energy generated, and any instantaneous surplus solar exported to the grid will be compensated at the net feed-in tariff, which as of today is 2.08 rupees per kilowatt hours. HD consumers have the option to go for paralleling, wherein surplus solar exported to the grid has either to be curtailed, or if it's not being curtailed, they will not be compensated for. Now, to close this slide, or the last slide here is, you see a line diagram here. Now, assuming that the cost per kilowatt hour of rooftop solar costs you about 5 rupees. Now, those 5 rupees will be the same cost over the lifetime of your solar plant. So let's say 25 years, the kilowatt hour of solar energy generated from your rooftop solar system will cost you 5 rupees. Today, if I'm an HD industrial consumer, my energy charge is already 6.35 rupees per kilowatt hour. And one could expect reasonably that this will increase at least by the rate of inflation over the next years. Now you see 2 lines here. The line at the bottom is the cost of rooftop solar, which is stable, a straight line over 10 years. And the upper line is the industrial tariff with an assumption that it increases every year by 5%. So even today, rooftop solar is already cheaper than your cost of buying it from Tangeco. Yeah? And since the tariff of Tangeco is expected to go up, your savings from rooftop solar will increase every year. So if one of your questions is rooftop solar today a financially attractive proposition for an industrial or for a commercial consumer, the answer is clearly that yes, it is definitely a very financially attractive investment option. And I'll close it here. I hand over to my colleague Hari, who will give you some case studies that we have done on the financial viability of rooftop solar for commercial and industrial entities. And if there are any questions, we will take them at the end of all the presentations. Thank you.
Thank you, Mr. Martin, for the importance of Tamil Nadu solar energy policy you briefed. Now I request Mr. Hari Shubis Kumar Subramanian, energy researcher from Oracle Consulting, to give this financial viability of rooftop solar for C&I customer. A brief profile about Mr. Hari. Hari is an energy engineering working as a renewable energy expert at Auroville Consulting, where he focuses on the feasibility of behind the meter solar plus energy storage as a part of the sustainable energy transition in Tamil Nadu. I request Mr. Hari to take forward the session, please.
Thank you, Mr. I hope my screen is visible. Right. So, following where Martin left off, I'm going to present about the case studies of financial viabilities of rooftop solar for C&I consumers here in Tamil Nadu. So this would be the context of the presentation today. We'll follow what are the current scenarios here in Tamil Nadu and the scope of the presentation, followed by comparison of different metering mechanisms here for LT and HT consumers, case studies for respect to LT and HT consumers, what are the possible available financial options, and what are the opportunities which are available at the data. So, coming to the context of Tamil Nadu, the last tariff revision happened in the financial year 2016-17. Since then, there hasn't been an increase or change or modification in the tariff, and it has been 4 to 5 years now. And with the new government being elected, it is possible to assume that there will be an increase in electricity tariff in the near future. As Martin mentioned in the last slide, the rooftop solar cost of rooftop solar energy is currently less than the cost of grid supply for C&I consumers in Tamil Nadu. And as the tariff is expected to grow in the future, the cost of rooftop solar is going to remain constant. Going for rooftop solar not only attracts financial benefits for consumers by having lower electricity bills, but also has environmental benefits such as reducing the carbon footprint, which on a longer term will have an impact on the climate actions which India has in overall. Scope of the presentation here, we will discuss about the case studies on the financial feasibility of an optimally sized rooftop solar system for C&I consumers both in LT and HT category. So currently, an LT consumer is eligible for a net metering mechanism. I'll explain in the next phase about how it works. And as Martin said, the current feed-in tariff is at 2.08 rupees, lower than the actual cost of generation as well as cost of generation of solar itself. For HT consumers, we have paralleling options where on-site an HT consumer can put up to 1,000 megawatts of rooftop solar within the limits of the premises and behind the meter. And the paralleling operation is the rooftop solar operates parallel to the grid, and they have a paralleling operation fees of 15,000 rupees per megawatt per month. And then the next option is open access, where the industrial consumer are not entitled just only to purchase electricity from TangentCo. They have an option to either have their own self-owned system of a captive system or purchase electricity from a third party. So you have an open access captive where your connected load needs to be more than 1 megawatt for rooftop solar. For solar, an exception is wind energy. And for open access third party, your connected load needs to be greater than 1 megawatt. So in case where you can go either for a single person open access or a group open access captive and third party is eligible. So a bit of a descriptive or a representation of how a feed-in mechanism works for the LT consumer in Tamil Nadu. Assuming we have a rooftop solar, most of the electricity generated instantaneously is being used for the internal loads. And then the remaining electricity in terms of excess is being exported to the grid. So we have a bidirectional meter which records the instantaneous solar export to the grid as well as the solar energy imported. So based on the meter readings, the import from the grid is multiplied with the current consumer tariff, and it is being subtracted on the solar energy exported. So the net bill would be the difference of the actual consumption from the grid minus the export to the grid. Coming again to the HT consumers, they have 3 different options of going parallel: open access captive and open access third party. This is more of an indicative cost of how much how much it would cost for going for solar in all three cases. In paralleling, where we have rooftop solar, the cost of generation is slightly higher, 4.15 rupees, and they have no cross subsidy charges. A paralleling charge of 15,000 rupees per megawatt per month. This is about 4.26 rupees per unit of electricity. This is a lifetime cost. And for a captive system, mostly it is a megawatt scale. So it is a ground mounted system, so the cost of generation is lower. And they don't have cross subsidy charges. They only have open access charges because for an open access captive user, the user needs to own 26%, minimum 26% of the plant itself, and is required to consume minimum 51% of the total electricity generated from the captive system. So they don't have a cross subsidy charges. On the third option, we have an open access third party where you don't have to make any investment. The cost of generation, since being a megawatt scale, would be at 3.04 rupees. But then they use both in captive and open access. They use grid as a transmission system to transfer the electricity from the source of generation to the point of consumption. So they are eligible for cross subsidy charges and paralleling or open access charges. So which results up to 5.18 rupees per unit of electricity. So when you see, we compare all the cost in paralleling, captive, and third party, you can notice that the cost of generation or cost of energy looks still lower than the actual cost for a HT consumer in Tamil Nadu, right? The next slide. So next comes the question, like, how do I size my solar system? Do I cover the entire generation with my solar, or do I size it based on what makes financial sense? If you all remember, the cost of for an LD consumer, if you export an excess electricity to the grid, you'll be paid at 2.08 rupees, which is less than the cost of generation, which is at 4.15 rupees, nearly half the actual cost of generation. So it would be optimal to emphasize self-consumption. And for the other case of an HT consumer, there is no compensation for export to the grid. So how do we size, how do we ensure that we get an optimal system size? For an example, this is an instantaneous or hourly load profile of a commercial consumer in Tamil Nadu. It start operating at 9 and till 9 they have an operation as an entity, right? So then how does a load, if you're proposing a rooftop solar, this is a rooftop profile for a 11 kilowatt system. And this ensures that more or less the solar energy generation should match the actual consumption pattern to minimize the export to the grid. So there are 3 points which we keep in mind while designing a system which is financially very attractive is maximize self-consumption, minimize the import from the grid, and minimize the export to the grid because the cost of generation is higher than compensation rate. So going ahead with a case study, which we have done for one of a commercial consumer here in Tamil Nadu, LD commercial consumer. So they had a commercial consumer profile of around 18,000 units of demand every year, and they fall under the commercial tariff of 8.05 rupees fixed charges. And we did a capex model of 70/30 and with net feed-in tariff of 2.08 rupees. So we proposed a system of 11 kilowatt, which results in a system capital cost of around 5.5 lakhs, which requires around 110 meter square area. So going into the financials behind it, if for the proposed case, if the entire electricity is being sourced from the grid over a period of 25 years, it would result in a discounted cost around 26 lakhs. Whereas if you go for the proposed rooftop solar system size, over 25 years, there is a saving of around 30%, where the final cost of electricity is around 17.4 lakhs. There's a around 30% savings. So speaking about the payback, the return of equity is around at 4.46 years, and that is on 31.7%. So it's not only speaking of the environmental financial benefits, the environmental benefits, there are around 227 tons of CO2 emissions has been avoided because of the 11 kilowatt system over the lifetime. And, let me share the screen. Right. Hope it's visible now. So, and it results in a solar energy penetration of around 87.34%. Going for a HT consumer, which had an annual consumption around 6,58,000 in a year, with TOD applicable to HT1A industry, with demand charge of 350 rupees per kW. We proposed a solar PV system size of 190 kilowatt, with the system capital cost comes around 78 lakhs, and a rooftop space around 109,900 meters square. Can I share my screen? Well, sorry. So this is the same financial benefits of going for rooftop solar, where you have around 13% savings in the electricity bills over the lifetime of the plant, with a payback of 3.72 years and an IRR of 35%. And going for the in total benefits, they could have avoided 5,221 tons of CO2 if they had gone for rooftop solar over the period of time. So the next question which really arises is, okay, this is attractive. How are we going to finance this, right? So biggest problem, most of the people are not aware there are multiple different financing options. One is a capex, which is a very predominantly known one, where the capital investment is made by the consumer, and the installation, operational maintenance is taken care by the EPC company. Generally at 30-70% of debt equity ratio. And to be frank, 90% of the projects in India are through this capex model. But the recently picking up model is the RESCO model, which is called a renewable energy service company, where the capital investment is made by a third-party developer. The installations, maintenance, and operation is taken care by them. But they agree upon a tariff between the user, to which they sell the electricity to the consumer itself. So they have a self-consumption, and they can avoid investment, significant capital investment. And there's one more option, which is a lease option, where the customer can lease the system from the developer. It has been a practice quite broadly in the abroad scenarios, but not as much as here in India. So coming to the next slide. See, along the lines of the case studies which we have presented, we have committed to do around 20 pro bono financial rooftop solar assessments for C&I consumers here in Tamil Nadu. And it would be done on a first come, first served basis. So if you could contact us before 30th of September this month, we will be able to go ahead with the assessment for you. And for the assessment, you'll need to provide an electricity bill for a year, preferably 2019, because from 2020 and 2021 you have the COVID and lots of fluctuations there. It will not represent an actual or it will not give sense to the actual consumption pattern you have. And more or less the available rooftop area and your connected load and tariff category. So if you want to connect further on to getting a solar assessment for your for a commercial or a industrial consumer here in Tamil Nadu, please do reach me out at Hari@Auroville Consultant. And thank you so much for your time and attention, and thank you, Siki, for arranging such a wonderful webinar.
Thank you, Mr. Hari. Hari, Sadhana has joined.
Just yes, ma'am is there. Ma'am is there.
Yeah. Good evening, ma'am. Yeah. Now I request Ms. Sadhana Mankar, Deputy General Manager, State Bank of India, to deliver the address on Suprabha scheme credit lines for rooftop solar. A brief profile about.
Good evening.
Yeah, ma'am. A brief profile about Ms. Sadhna Mankat. She is the Deputy General Manager of State Bank of India. She'll be available to take question at the end. Ma'am, I request you to take forward, ma'am.
Yeah. Good evening, everyone. Thank you, Sikki, and all the participants here to have provided us an opportunity to give a brief on what we have as a product for solar rooftop. To initiate, I would like to say that State Bank has really been a pioneer in this solar rooftop program to get the national initiative of attaining the target of renewable energy. So we have tied up with World Bank to provide a concessional rate of interest for the MSME and the institutional sector for solar rooftop, grid connected solar rooftop, and we've got special products for it. Since 2016, we have been financing this area, and we've already financed around more than 300 projects worth around 2,000 crores. With me are Mr. Sanjay Haider and Gauri to take this forward. So Gauri would be doing the presentation, and we'll be taking any questions that we have. We'll be taking it towards the end of the presentation. Thank you. Over to Gauri.
Yeah, hello. Good evening, everyone. Am I audible? Hello.
Audible, please take it forward.
Yeah. Thank you. I would like to thank SICCF to provide us this opportunity to present State Bank of India and World Bank Rooftop Solar PV Program Scheme for MSMEs. Yeah, so we'll just see briefly why the MSME sector is in focus. So MSME sector is having approximately 18 gigawatt of rooftop solar potential across India. It is a vital sector in socio-economic development of India. So MSME sector is also the second largest employer right after the agriculture, and we are having a large untapped potential in MSME sector, but due to low awareness, not much uptake has happened yet. But when this platform such as today's webinar, these are being given to the EPC contractors, the RESCO players, and the MSME, so that they become aware about the benefits of installing a rooftop solar and how they can move ahead with it. So why the rooftop solar is good for MSME's business? First and foremost, it saves on the energy bill, which is the big portion of your apex. So, and there is no additional cost as to acquisition of any land. You are having a rooftop space available with you, and you are installing a plant above it. Also, it protects you against the rising grid tariffs in India. Another important reason is tax benefit. So you can take 40% accelerated depreciation under the provisions of income tax. Now, in previous presentation, Mr. Hari has explained us what is a capex mode and what is a opex mode. But I will just briefly touch upon this on the banking perspective. So in under capex mode, the borrower sets up the rooftop solar project with intent to reduce his own power cost, and the residual power can be fed into the grid. So in this case, an EPC contractor will be approaching an MSME, and he will be installing the rooftop solar on the MSME's rooftop. The O&M may or may not lie with MSME. The borrower in the books of the bank will be the MSME on whose rooftop the project will be installed, and the loan sanction under this under capex mode. The appraisal of the loan will be done just like any other asset financing proposal. and it will be mainly dependent on his main business activity of the borrower. When we come to the RESCO mode, which is Renewable Energy Service Company mode, so any RESCO can develop the rooftop solar projects for its clients, and the off-taker and the RESCO enter into a long-term PPA, and RESCO. So it can be a single project basis also, and it can be multiple projects. So RESCO can be an aggregator where he will be installing rooftop solar system over multiple projects at the same time, and he will approach bank for the line of credit. The borrower in the books of the bank will be the RESCO. There will be no direct relationship between the bank and the off-taker, but the off-taker will be assessed as the final cash inflow is being generated from off-taker itself. In RESCO mode, the financing is done by project to project basis, or at a bundled project basis, wherein the RESCO can avail a line of credit from the bank under this scheme. So how SBI can help MSMEs or RESCOs to achieve your solar dream? So SBI has developed a customized customized project for the for capacity up to 1 megawatt to give a thrust to smaller projects, wherein you can avail loan maximum up to 80% of the project cost. And under this scheme, loan is permissible also to the unrated capex borrowers, and DSRA is reduced to 3 months principal plus interest. So this is the brief depiction of what different types of schemes are offered under the State Bank of India and World Bank line of credit. I'll just move on to next slide where it is explained in detail. So as you can see here, we are having three variants under the World Bank rooftop solar scheme, which is up to 1 megawatt, EDFS, which is Electronic Dealer Finance Scheme, and for the projects exceeding capacity of 1 megawatt. So any sole proprietorship firm, any partnership firm, any company, SPV, NBFC, RESCO can definitely avail loan under this scheme. And the loan amount for the projects up to 1 megawatt and for projects in EDFS up to 80% of the project cost, they can avail loan. And for projects greater than 1 megawatt, maximum to 75% of the project cost will be provided. And if you can see here, the tenor for projects up to 1 megawatt will be maximum up to 10 years or 80% of the PPA, whichever is lower. For EDFS, it is 10 years, and for projects greater than 1 megawatt, it will be 15 years. And based on case-to-case basis, the moratorium is also provided by the bank to the projects. Primary security is obtained by the bank in case like hypothecation of plant and machinery, receivables, etc. And if collateral may be charged if the fixed asset coverage ratio falls below 1.20. And we'll come to the most important part right now, which is the rate of interest. So currently the range is somewhere between 8.15 to 8.45. So this scheme is connected with the 6-month marginal cost of fund-based lending rate, which is 6.95 plus 120 to 150 basis points are added to 6.95 based on the credit rating of the client. And when this loan is extended to the MSME, the loan is, instead of linking to 6-month MCLR, it is linked to bank's external benchmark rate, which is EBR. At current, it is at 6.65%, and based on the credit rating of the client, 120 to 50 basis points are added to 6.65. So the final range of rate of interest can be between 7.85 to 8.15. These are the indicative list of the documents which you have to submit while approaching a bank, which is like the ID and address proof of the applicant, all the income tax returns, last 3 years financial documents, your companies, MOA, AOAs, GST returns of the last year, And for particularly rooftop solar projects, you will have to submit a copy of detailed projects report along with the projected balance sheet, profit and loss account statement, cash flow statement, and technical evaluation study of the project. This is just given here for the information. This is the benchmark cost for the states which MNRE has come out with for the year 2021-2022. Okay, so these are the SBI branches in the southern state of India wherein you can go for a loan. So what I'll be doing, I'll try to put this list of these branches over chat box, wherein you can just decide which is the nearest branch which you would like to approach for availing the loan under rooftop solar scheme, and you can get back to us. We will share our contact details in the chat box, and we will get you connected with the particular branch. So for any queries, for any information which you may require, for the information with respect to the branch manager of these particular branches, you may write a mail on rooftopsolar.cc@suprabha.org, and this the whole presentation in the kind of scheme brief is also available on Google. So you can visit a State Bank website. There you can visit other services, and you will find SBI under SBI World Bank tab. You will find the brief scheme details, or this is the direct link of the document which I'll also be pasting in the chat box. Thank you, everyone. If you have any query, do reach out to us.
Thank you, ma'am. I request participants to post their questions in the chat box, please.
Yeah. We are having here DGM ma'am, Sadhna ma'am, AGM sir, Mr. Sanjay present over here. So if you have any queries, you can definitely post them in the chat box, and we will be happy to take care of. Thank you.
If you have any technical questions related to solar rooftop PV here, specifically for Tamil Nadu, myself and Martin are here to answer the questions.
All right, it appears there are no Q&As. Shall we, in this case, close the session?
Yes, ma'am. I think that sounds better option. So if they have any questions later,
Yeah, if any questions, participants, you can mail it to siki@siki.in. So we'll share the questions to the concerned speakers, and we'll let you know about the answers. And Mr. Hari, can we close the session?
yes. So
yeah, I request you to give the closing remarks, please.
Sure. Thank you. I would like to take this opportunity to extend my warm thanks to Ms. Sadhana Market and her team, Ms. Gauri, Mr. Haider, Mr. Mohan, and Shiv also. And I will also take the time to thank Mr. Martin and mainly Siki team also, Mr. Shankar and Mr. Vinod Solomon also, and specifically Saranya and Bhavani helping me and coordinating with arranging this session. And I hope this is an informative one. And at a later point of time, the recorded session will be on YouTube. So you can revisit at any time, and feel free to ask questions, because we're looking to ensure that the solar energy is being taken to all corners here in Tamil Nadu, not in Tamil Nadu, but India in the future also. So yeah, and I really thank you all for your participation and time. Please reach out if you have any questions.
Thank you.
Thank you.
Yeah,
Thank you.
I have. Yeah, thank you. I have pasted the link for the scheme details on the chat box along with my details and the email ID wherein you can reach out to us. Thank you.
Thank you.
And I also
Thank-
believe, Sharanya, that the presentations can be shared with the participants today.
Yeah, once the session is over, like, we'll share it to all the participants.
Thank you.
Yeah, thank you so much.
Thank you all.
Thank you all.